In this video, we're analyzing Meituan Dianping, one of the largest consumer service e-commerce companies in the world. It has a market cap of $300 billion, making it the third largest internet platform company in China, behind only Tencent and Alibaba. Imagine if DoorDash, Airbnb, Booking.com, Expedia, Instacart, and Yelp were all on one platform. Those are just some of the many services that Meituan provides to its 476 million users in China. Its business accelerated in 2020, with Meituan's stock up over 200% that year. If we take a look at Meituan's WeChat mini program homepage, we see that it provides a wide range of services. When it comes to its business model, Meituan generates revenues from its services through commission fees and online marketing services. The revenue from its services fall into three main categories. 1. Food delivery. 2. In-store, hotels, and travel. And 3. Other initiatives. Let's start with the largest segment, food delivery. To understand the scale of Meituan's food delivery business, let's compare it with DoorDash, the largest food delivery company in the US by revenue. In the third quarter 2020, Meituan generated almost 4 times the amount of revenue as DoorDash, $3.2 billion compared to $880 million. In terms of gross transaction volume, Meituan's GTV was $23.6 billion compared to DoorDash's $7.2 billion. Finally, in terms of orders, in 2019, Meituan had a total of 8.7 billion food delivery transactions, more than 33 times DoorDash's 260 million orders. Food delivery made up 58% of Meituan's total revenues and 22% of positive operating profits in the third quarter 2020. Food delivery revenues increased 33% year-over-year, whereas operating profits increased by 132% year-over-year. Operating margins were in low single digits at around 4%. Within the food delivery market, Meituan's largest competitor is Alibaba's Ele.me. The two platforms combined have an estimated 90% market share of the total food delivery market in China, with Meituan as the market leader. Next, we'll discuss the in-store, hotels, and travel segment. In-store includes services such as restaurant guides and online coupons similar to Yelp and Groupon. Hotels include hotel bookings and reviews similar to Booking.com. Finally, travel includes tourism, airline, and cruise ticketing similar to Expedia. Overall, this segment makes up 18% of total revenues and 78% of positive operating profits. Revenues increased 5% year-over-year, and operating profits increased 19% year-over-year. What's important to note here is that although this segment's revenue is lower than its food delivery business, in-store, hotel, and travel generates the majority of Meituan's operating profits. This segment has operating margins of 43%, which is much higher than the 4% operating margins in the food delivery business. Meituan's business strategy involves acquiring new customers, mostly through its low-margin but high-volume services such as food delivery. Then, some of those acquired customers eventually use higher-margin but lower-volume services such as hotel bookings once they've been introduced to the platform. Within the hotel segment, Meituan is estimated to have the highest market share, with its next largest competitor being Ctrip. Finally, we have the Other Initiatives segment, which makes up 23% of total revenues, which grew 43% year-over-year, and is currently unprofitable with negative 25% operating margins. Other initiatives include grocery retail, bike sharing, community group buying, and much more. Within this segment, the most important business to focus on is community group buying. Community group buying involves a community leader who purchases groceries and other items in bulk on behalf of local customers. Then, a retailer delivers the goods to the community leader, who then distributes the goods among the local customers. In turn, the community leaders receive a commission from the order. Group buying is especially effective because it lowers delivery and customer acquisition costs for platforms. Currently, group buying is one of the fastest growing markets in China, leading to heightened competition. Major e-commerce platforms, including Alibaba, JD.com, and Pinduoduo, are all competing in the market. That being said, Meituan looks to be a market leader in group buying due to a variety of factors, which include its early mover advantage and effective offline execution as evidenced through its food delivery and other services. As of now, due to high competition, Meituan's group buying take rate is likely in low single digits. However, with more higher margin products and eventually less competition, Meituan's take rate looks to increase to double digits over time, leading to much higher profitability. In addition, as Meituan increases its scale, it will have more bargaining power to reduce community leader commission rates as well, which will reduce expenses. Moving on to investors, Meituan's strategic investors include Tencent and Sequoia Capital. Tencent in particular is a major partner since Meituan has access to Tencent's 400 million daily active users on its WeChat mini programs. WeChat mini programs make it easy for users to access Meituan's platform within WeChat, driving additional user traffic. Meituan also leverages WeChat groups, which are used for community group buying, and uses WeChat Pay for payment transactions, although Meituan also has its own payment method as well. Tencent owns a 20% ownership stake in Meituan, making it one of the largest shareholders in the company. In terms of company management, Meituan is still founder-led. Wang Xing, the founder and CEO of Meituan, is a serial entrepreneur, having started his first company in 2003. In 2010, he founded Meituan, a group buying business similar to Groupon. Meituan successfully competed against its thousands of competitors in China in the following years, later merging with Dianping in 2015. Wang Xing has a 66% ownership stake in Meituan, making him the company's largest shareholder. Finally, we'll discuss major opportunities and secular trends for Meituan moving forward. Starting with macro trends, the consumer service industry is mostly concentrated in urban areas with high population density. China's massive population and rapid urbanization have led to the emergence of a large number of cities, accelerating the growth of the consumer service industry. As of 2016, China had 156 cities with a population of over 1 million, compared to 10 in the US. China's urbanization rate is expected to continue increasing through 2023. Moving on, private consumption is projected to grow at a compounded annual growth rate of 8% from 2017 to 2023 due to a structural shift from an investment-driven economy to a domestic consumption-driven economy in China. The improvement in standards of living have led to significant changes in consumption behavior by moving away from basic needs to more discretionary spending and from physical goods to more services. Shifts in labor also have a major impact, with the amount of people working in the industrial and agricultural industry expected to decline and shift towards the services industry. These macro trends will support the consumer service industry, which is expected to grow into a $5 trillion market by 2023, implying a compounded annual growth rate of 10%. Within this industry, through increased digitization, the consumer service e-commerce market is expected to reach over $1.2 trillion by 2023, implying a compounded annual growth rate of 20%. Breaking down this market, food delivery, hotel bookings, and other services are all expected to grow significantly over the coming years. On-demand food delivery from restaurants is expected to grow at a compounded annual growth rate of 31% from 2017 to 2023. In addition, online non-restaurant food retail, primarily via delivery, is expected to grow at a compounded annual growth rate of 22%. Meanwhile, the hotel e-commerce market is also expected to grow, as measured by the amount of room nights booked online. This market is expected to grow at a compounded annual growth rate of 13% through 2023. Finally, we'll discuss opportunities in China's grocery retail market. In 2022, online grocery retail is expected to drive the majority of the grocery market's growth. The total value of grocery retail sales is expected to grow in the mid-single digits annually, in line with GDP growth, reaching $1 trillion in 2022. In that time period, online will likely increase its share of total grocery sales from about 10% to 18 to 28%, growing at a compounded annual growth rate of 30 to 50%. This segment is expected to be one of Meituan's main growth drivers and will be important to focus on in the coming years. With many secular trends behind it, if Meituan can continue to be a leader in the growing consumer service e-commerce market, Meituan could potentially reach a $1 trillion valuation in the future. Subscribe to stay updated for future videos, leave a like, and comment down below what companies or stocks you would like to see next.